YouTube, this is Zach with Achilles Financial, and we are back with another video where we're going to be looking at some of the moves today as well as what I am looking for tomorrow. So I'm going to be going over some of the plays that I'm going to be watching. As I'm doing this, I would like for you to drop in the comments below some stocks that you are watching to be making plays on this week. Again, this is largely going to be day trades, options trading, swing trading. That's what we're looking to utilize in this portfolio. And if we look at the SPY, you can see that we've been trading nearly sideways over the course of the past week, where we have these spikes followed by these long downtrends. So I'm looking to see what is in the rotation. Are we going to be holding these levels? As well as if we don't, then what's going to be what spurs that news? So by and large, what is moving the market right now is good economic data followed by increased COVID-19 cases. So that being said, we've got that news coming out each morning right before market open. Generally speaking, that's been perceived well. We had some good new home sales data. We had some decent jobless claims last week. It's been continuing to decline in terms of the amount of claims that we're getting. So we've got these rotations that we're seeing here. However, the Nasdaq just hit a record. So what does that mean? Again, Nasdaq is very heavy in the tech side. So what I mean by that is if we look at Apple just recently hit a all-time high. If we go down here, you can see that the all-time high today was 372. That is the 52-week high. So what does that mean? If we look at the year, we're going all the way up. Now, Apple is one that I find of particular interest just because they don't have as much of that software exposure like someone like a Microsoft does or some of the chip makers. However, they're continuing to outperform the market, and this is with a lot of their stores being closed down, so they don't necessarily have that open retail aspect that they normally would have. So I don't know how sustainable this is. However, people really like tech right now, so much so that when you look at these options, and I'm looking at the ones with time, we've got a lot of premium baked into this. So as you can see, this is expensive, as well as when we're looking at the put side, it's still expensive. So I'm watching these. However, the momentum right now for a stock like Apple is definitely bullish, and you're going to see that also with Microsoft. So I've been watching Microsoft. We talked about them on Sunday, said that it was going to be a stock to buy. Then they hit all-time highs. They're holding steady here. It'll be interesting to see if they break down back a little bit, have a little bit of retracement, but we're waiting to see that. So with the tech stocks being very high priced in terms of premium, hitting all-time high, what I'm going to be looking for is a rotation into value. And I thought that we were going to get that with the bank stocks today. However, I think that maybe that news that's going to be coming out later this week with the stress test, which is coming out 4:30 p.m. Eastern time on Thursday, is going to be a key piece of that. But as you can see, the bank stocks really, they held steady for the most part during the day. I mean, overall, we're up 89 cents or 1.5%. I think that's pretty even, as you can see with JP Morgan, Bank of America. They both traded higher, and then Wells Fargo actually lost a little bit today. So despite the fact that they were up as much as 3%. So I'm going to be watching the bank stocks. We have news for them later this week, so I think that's when we're going to see them pop up. So the two stocks that I'm really looking at is going to be Home Depot and Walmart. The reason for that is if you look at over the past month, we've come back up to those near all-time highs. However, as people continue to work from home, as people continue to be remote for full term, I think Home Depot and then the sympathy play with Lowe's are going to continue to be strong performers. However, my problem, or rather not problem, but my concern with Home Depot is they are already trading at all-time highs, as well as the fact that they're not a big mover. I mean, they were down nearly $100 or 40-50% from where they're at now. And that is a big move over a short period of time to get higher than they were in February earlier this year. So that being said, I think that they can get back up to those 255 levels that we saw earlier. So I'm interested to see what it's going to take to get to that point. And again, that was a while ago, but I still think that they can get there. So yeah, this is the level I'm looking at. The problem with them is, again, very bullish, and we'd have to catch that on like a weekly to be able to catch some of that premium. As you can see, even these at the money calls are right at where they're going to go to all-time highs. So they would actually really have to move. I still think there's some opportunity there but a $15 move for a stock like Home Depot, that is a big move. So these are pretty pricey right now, but I'm watching them, and that's the key of these videos, is I want to show you what I'm watching and what I'm looking for before I make these trades. Walmart is in a very similar boat to what we just worked through for Home Depot. Again, they're coming off those all-time highs. The big news with Walmart, and I think that we're not going to really see the full impact of this until we get a little bit closer to the next round of their earnings, is their e-commerce is booming. So people are buying online from them more and more, and that was an area where they were really losing to Amazon. And this pandemic is really showing that they will continue to be a mainstay, and the grocery delivery business, the pickup and online sales is going to keep them coming. However, over the past week, we didn't get that same rotation over the past 2 days. Again, we saw that uptick, but I think they've got more in them. I'd like to see them get up to 130, and they're not trading as much of premiums as we just saw for Home Depot. Granted, that is a larger stock, a bigger stock price, so it's obviously going to be more expensive. But as you can see, just even at the money, we're seeing percentage-wise it's much lower. So even at a weekly, again, to 125, I do think that is possible, even though they're a slow mover. You're looking at 30 cents per share, 39 cents per share. So I do think that's possible. Those are some that I'm going to be watching. I'd like to see some momentum, so I wouldn't mind paying an extra 5 cents for some momentum if I saw that it was going to go that direction and I had the ability to switch that premium or catch that. So in summary, what I'm going to be looking at over the remainder of this week is that rotation into the value stock. So we've had a lot of big news this week on tech, and we need that value to follow up. The big thing to watch here is going to be that COVID-19 cases, not really just the cases, because I think that overall the market is not necessarily concerned about increased cases, but more so they're going to be concerned with increased hospitalizations. So that's something to note, as we've seen a much lower mortality rate as more and more people get tested, as you would expect. So it's going to be important to watch, do we have the healthcare capacity to handle this, or are we going to get to the point where people are going to say, why aren't we shutting down? So be watching that, be watching these stocks. If we see that rotation, then what we're going to be wanting to look for is puts on some of the tech stocks that have that retail exposure, and calls on some of the strictly software stocks. So be watching that. Let me know your comments below what you're going to be looking at, and if you found this content helpful, please leave a like and subscribe. Thank you, everyone. Talk to you later. Bye.